Hey, good morning, everybody. Today is Friday, May 27th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Happy Memorial Day, everybody. And let's get started this morning with our Spectrum Analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 11 came from the semiconductor devices industry. We had 10 from the biotech industry, 9 application software, 5 mass merchants, and 4 specialty pharmaceuticals. These might be good places to look for leadership in this market. Let's take a look at what the Russell 2000's up to. For the second day in a row, the Russell tested resistance right here in the 1140 area and failed. Note these two bars where we weren't able to clear this resistance area. I would expect that we do clear that resistance area eventually, and then we can assault the recent high in the 1154 range. I believe that the Russell 2000 is the key to the market going forward. I've been saying that for a long time. And I think that if we can take out that 1140 area and the 1154 range, that should clear us to assault resistance up here in the 2005 range. We'll keep an eye on the Russell, see if we can break above that resistance, and see where we go from here. Let's take a look at the NASDAQ Composite. But before we do that, stocks closed mixed yesterday on light trading volume. The NASDAQ closed slightly higher while the S&P closed fractionally lower. For the second session in a row, the NASDAQ tested and failed at resistance in the 4900 area. That resistance will be the next big test for the bulls. A move above that level would put our recent market high in the 4940 range into play. Distribution or professional selling in the market is still a concern. Currently, the NASDAQ has 8 distribution days and the S&P 7 in the past month. But we've not added distribution days in over a week. In light of recent market strength and the aging distribution, the Investors.com market outlook is a confirmed uptrend. Meanwhile, our market timing model is on our most aggressive buy rating, a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working back toward fully invested. Thursday, advancing issues edged decliners. New highs handily outpaced new lows. According to our Ramosi ratio, small capitalization stocks bettered large, but large caps continued to slightly outperform on a 10-day moving average basis. Bulls would prefer to see small caps outperform. Our Ramosi swing timing model is indicating a moderately overbought condition in the market. Keep in mind that a moderately overbought market can become severely overbought. It appears that the market sorted itself out in favor of the bulls. Both the NASDAQ and the S&P have recaptured their 250-day moving averages and decisively broken out of short-term downtrends. While our distribution count is extremely high, the distribution is aging and isn't being replaced. Our market timing model is now on our most aggressive buy signal. Traders should be working toward fully invested, but should remain wary. As always, keep your stops current and in place. Okay. Yesterday, the NASDAQ Composite was up 6.88 points or 0.14%. We closed at 4901.77, and as we noted, we've been struggling with the 4900 area, resistance in the 4900 area. Notice how on Wednesday we tested that area and failed. We tested it again yesterday and again failed. I believe that we'll take out that resistance in the 4,900 area, and we'll make an assault on the recent high up here in the 4,940 range. Trading volume yesterday was below average and was below the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We've been in an uptrend since February 18th. We still have 8 distribution days on the NASDAQ, which is a lot of distribution, but notice that we haven't seen any distribution recently, and the older distribution gets, the less relevant it becomes. And in fact, by the time we get together again on Tuesday after the Memorial Day weekend, I believe we will have lost these 3 distribution days due to age. And so our distribution count will be down to a much more manageable 5 days of distribution in the past month. Right now the NASDAQ seems to be bracketed by by resistance up here in the 4,900 area. And I'm going to say that we have support down here in this area. Currently our market timing model on the NASDAQ is on our most aggressive timing signal, and that's a margin signal. Let's take a look at the S&P 500. The S&P closed fractionally lower yesterday, down 44/100ths of a point, or 0.02%. We closed at 2090. Trading volume was below the prior day and below average. The S&P 500 is in a confirmed uptrend. We have 7 distribution days in the past month, but like the NASDAQ, the S&P over the weekend is going to lose a couple of distribution days. Right now the S&P is bracketed by support down here in the 2044 range and resistance up here in the 2116 area. The S&P 500 is on our most aggressive timing signal, and that's a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working back toward fully invested. Before we go, I want to talk about Ultra Salon Cosmetics and Fragrances. Ultra operates 874 beauty stores in 48 states offering hair care, cosmetics, and other products as well as salon services. The stock broke out of this first stage base back in December, formed this base on base formation, which it broke out of back in March, and has recently put in this nice little tight consolidation area, which would have been a great buy for swing traders yesterday. The problem with buying Ultra yesterday was that they reported earnings last night after the close, and so it was a very dangerous buy. Ulta reported very solid earnings last night, and the stock gapped higher. It may be worth taking a look at for aggressive traders. This is a very aggressive buy, but aggressive traders may want to buy the gap higher this morning. Ulta is not on our universal watch list, at least not yet. I would suspect after this weekend that it probably will be on our universal watch list, and that's why I'm bringing it up today. Ulta gets a 64% checklist rating, and I would imagine that that rating goes up as we see the market react to the earnings surprise last night. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs Incorporated believes to be accurate. Ohannes & Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.